Hi, I'm Al from the Money Study with another episode of the Ultimate PSS Education Series and number 51, all about non-concessional contributions, making other contributions to superannuation along with your PSS contributions. There's our disclaimer, facts and figures, information only, not advice. Now, your contribution, your member contribution to the PSS is an after-tax contribution. Now, an after-tax contribution is called a non-concessional contribution. There are no concessions for putting it in. And so what happens here is you get paid, you get taxed on it, and then the money goes into your PSS. Now, even so, you don't get it in your hand, but yes, you are indeed paying tax on it before it goes into your PSS. So this is not salary sacrifice. Listen to the episode on salary sacrifice we've already done, where you get tax deductions. No, contributions to the PSS are a non-concessional after tax, a personal contribution without any tax advantages. There's no tax disadvantage in the regard that if you receive this money into your pay packet, you still would have paid tax on it anyway. So the fact that it went into your PSS is no worse off there, but you're not getting a tax advantage, you're not getting a tax deduction for putting it in. So your 2%, 5%, 10% contribution, whatever you're doing, is an after-tax contribution, a non-concessional contribution. Now, you are indeed allowed to make extra after-tax contributions to super, but not to the PSS. You are capped at your percentage per fortnight, and that's it. You cannot do a lump sum contribution to the PSS, but you certainly could, under most circumstances, make an after-tax contribution to another super fund. So you could be a PSS member, contributing away every fortnight, doing your 10%, but you've still got a bit of money left over, nice situation, every fortnight, or just got a lump of money that you want to put into super. Yes, we can do that into another super fund. So literally all it is, we're just taking money from a bank account, you've already paid the tax on it, and we're going to plonk it into another super fund, perhaps just by doing a BPay or writing a check, if anyone's still got checkbooks these days. You can even ask your employer to do non-concessional contributions into another super fund. Now, most people would normally probably try and do them as salary sacrifice into another super fund. But if you're capped out on the concessional contributions, then you've still got some spare money left over, yes, there's nothing stopping you from asking your employer to put that money into your super fund as a non-concessional contribution. So you're allowed to do both through your employer. It could be a dollar amount, so you're going to want to do $200 a fortnight, or you might just say, can you just put an extra 3% of my salary into my, whatever it may be, your other super fund. So you can make regular contributions, you could change it at any time, you can do a lump sum, you could just plonk in a bit of money before the end of the financial year perhaps, or it's totally up to you how you put that money in. But of course, with everything to doing with super, there are restrictions. At the moment, the cap for non-concessional contribution is $110,000. It's 4 times that concessional cap we talked about in the salary sacrifice episode, where the concessional contribution cap is 27.5. 4 times that gives us up to 110. So if the concessional cap goes up to 30,000, which is probably likely from the 1st of July 2024, in which case we'd probably expect we should see the non-concessional cap go to 120. Now, of course, that's the restriction in a year, but of course, don't forget we've got this overall restriction on making non-concessional contributions to your super, which we talked about in the APV episode, where if you've got more than $1.9 million total in superannuation, then once you get to 1.9, you are not allowed to do a non-concessional contribution effectively ever again. If you do, then of course you're either going to get taxed heavily on it, the highest marginal tax bracket, or they would indeed ask you to take it straight back out again. So just make sure that you understand there's a cap per annum, but there's also this overall lifetime cap, this thing called the your total super balance there, which is currently $1.9 million. Anyone in that situation, please go back to the APV episode and even the one about the TBC. And I'm doing a TBC webinar. I do them regularly. That you might want to log into that as well to see the ramifications of having these large super account balances. Now, on top of the 110,000 a year, there is a thing called a 3-year rule. Now, what that means is you're allowed to use the cap, the $110,000 cap, from the next 2 years. So you can actually do $330,000 in 1 year by utilising this bring forward rule. And in fact, you could probably, if you really wanted to, do $110,000, say, on the 25th of June, just before the end of the financial year. And as soon as you get into the new financial year on the 1st of July, then use the bring forward rule and do 330, effectively getting in $440,000 in the space of a fortnight. And of course, if you've got a partner and they've got to do the same for them, between the two of you, you could get around about $880,000 into super, all within a fortnight as a couple there. Now, remembering that this 110 a year, or if you're using the bring forward rule of 330, it does take into account what has already gone in. Meaning, if your PSS contributions are $10,000 for the year, you're doing 10% on a $100,000 salary, that $10,000 is a non-concessional, hence it has to be included in that 110. So if you're looking at just using the 110,000 for the year, and you've already, you're going to put in $10,000 over the year as your PSS contribution, you'd be then limited to $100,000 without going forward with the 3-year rule. No paperwork required to use the 3-year rule. It just means if you go over it, you've triggered it, and therefore your cap space for the next couple of years has been restricted. So just imagine you decided you put in $200,000 in year 1, the cap you've triggered the bring forward rule. Hence, if you put in 200, you can only put in 130 over the next 2 years. So it's literally 110 a year, but you can utilise 330 in a year. So whatever you put in that first year, you subtract that from the 330, showing what you can do in the next 2 there. Now, as I said, if you hit this 1.9, you can't do it. But if your total super balance comes down, let's imagine there's been a share market crash and your other super fund goes backwards in returns, yes, you can go back to commencing to get it back up to that cap all over again. The interesting thing is that since the 1st of July last year, the year before, that you are indeed allowed to make a non-concessional contribution to super all the way up to age 74, so long as you're under 75, whether you're working or not. There is no work rule to contribute to a super fund after tax. Yes, if you're claiming a tax deduction, you've got to be working post the age of 67. But for a non-concessional where you're not claiming tax deductions, you can just drop money in willy-nilly up until the age of 75 effectively, and you don't have to be working to do that. So if poor Aunt Mabel dies and leaves you $40,000 and you think, gosh, that'd be nice in super, because I want to later on convert that into perhaps another income stream, and I'll be talking about this in a further session, then we can get that money in even if you're not working, even if you've been retired for 10 years, not a problem at all. On your statement, yes, you'll find that. I think that's page 5 from memory. You'll see your non-concessional amount that's counting towards your cap. So if that's the amount of money this person was, putting in 10%, perhaps on 122,000, then that's their 10% contribution. That would have to be subtracted from the 110, and they could only do the balance without triggering that bring forward rule. So just have a look at that, remembering, of course, that if this is only as of the 30th of June, so you just got to make sure what you're going to be doing if you're going to do this in the next financial year. What will your contributions be in that year, the year that you're actually making the contributions there? So yeah, just a bit of an idea of what else you can get into super. If you need a little bit of hand on understanding the difference between concessional and non-concessional, your caps, what you can do and what makes sense to do, make an appointment with us via our website and we'll help you out.